Hey guys, this is Mubashir and today we are going to analyze Share India Securities Ltd. We are going to analyze its fundamentals and technicals too. So let's start the video with technicals. Share India Securities Ltd. Here it is. As we can see here, it has bounced back too much, right? Uh, like from one day or 29 September till today, it has bounced up back around 70%. Has gained too much value from this level, from 126 to 200 approx. I mean, in recent times, within 20 days, it has gained too much value. Maybe we will check why it is gaining too much value in this short span of time. So the IPO was launched around into 2020, and the all-time high is from that level. It has gained around 60 times, and from all-time high, it is down by the around 50%. So quite trading at discount, and but still, as we can see here, it is too much buying here, right? If we go with the one-day chart, we can see that. Look at that. I mean, it is gaining too much value from this level. We will see the reason behind that. Okay, let's go with the fundamentals part. So basically, as we can see, the market cap is only 4,500 only. So it is a micro cap company, we can say that, not even a small cap. So stock P is 14 and the industry P is 17. Even thought the stock currently gaining too much momentum, but still the stock price is lower than as compared to industry P. Okay, return on capital employed is quite acceptable, and return on equity is quite low, but still from this return on capital employed, it is greater than the return on equity. Shows that they have lower tax, as we can see that here. Promoter holding has been reduced within 3 years around 4.4%. That's quite concern. And EPS growth for the 5 years is quite very excellent. Quick ratio is they are having too much cash, we can say that. And current ratio is also higher. That's not good. They are having too much inventory in their stock. Okay. So here it is. Book value is 107, around 2 times. Price to book value is around 2 times, right? And sales growth for the 5 years is quite excellent. Average dividend payout is 8.5, which is around 0.66%. That's quite acceptable. I mean, it is a small cap company, even micro cap company, and if they are still giving dividend, it is quite good. And the EV to EBITDA is quite good, and the PAG ratio is also good. It is lower than the one. That's great thing. Okay, let's analyze that. It is P and EPS trend over the years. P in 2019 they were having a PE of 14 and the IPS of 1 around, and in 2021 they were having a PE of 11 and the IPS of 3.3. That's it. And in 2023 they were having a P there is no PE as shown here, but the IPS was 18.24. That's it. In 2025 they were having a P of around 11 and the IPS of 23. That's great. And now they are having a P of 14 and the IPS of 14. So overall, if we get the average, then we come to know that the PA and EPS is, if you look at the PS and EPS trend, it is quite undervalued, right? So let's compare with it is industry peer. Obviously, Motilal Oswal on the top. Okay. So here it is. If we quarterly sales variance is quite is in negative. Okay. PAG ratio is quite good. It is for the 12 months also not uh, lower than the industry peers. Okay. Sales variance for the 5 years is quite good. Profit variance for the 5 years obviously it is going to be good if it is the sales variance good. Interest coverage ratio is quite acceptable. Current market price to the book value is also good. EV to EBITDA excellent if we compare with its peers. Current market price to the sales also good. ROE and ROCE is quite acceptable if we compare with its peers, right? There is no clash. Okay. Debt to equity, that's good. T is also very excellent, we can say that, right? Now let's analyze the quarterly sales. As we can see, it is quite doing excellent on a year-on-year sales growth basis. From within 3 years, they are able to generate 100 crores more. Right? Look at that. From 231 to 341, around 110 crores. Okay, that's quite acceptable. Even good, I can say. Let's see the major cost. Employee cost is the major cost here, right? And it is increasing over the years. They are not able to reduce that. That's why maybe their operating profit margin has been compromised. Okay, as I can see, yeah, right, their operating profit margin has been compromised over the years. That's a bad sign. They have to reduce that, right? Interest obligation is quite increasing. We have to see they are increasing their debt levels. Tax, okay, net profit from 59 to 84, that's quite increase of around 60%, increase. Profit value, overall the quarterly results are good. Okay, now let's analyze the profit and loss statement, that is income statement. From 2016 till the 2025, within the span of 9 years, they are doing very excellent. Look at that number. Look at this one. From 74 to 1400. I mean, that's more than the around 20s, right? It is 20s approx. That's excellent. Let's analyze the expenses. Obviously, material look like they are now having some kind of material cost. Manufacturing cost, maybe it is about the application and all, and they are developing some kind of software and all. That's why the material cost is here. Here is too much. Employee cost remain is still a concern. I mean, employee cost has been increasing over the years. They have to minimize that. Maybe it is because of the increase in sales, but if the sales were 74, they were having an employee cost of around 12.5%, and if the sales is around 1400 crores, why the employee cost is increased by the around 12%, 17%? That's quite concern, right? If I'm not wrong. And other costs, they are able to it is quite fluctuating. Look at that. Operating profit margin overall is still they are in this profit and loss statement. They are able to generate good operating profit margin, and in 30% margin is quite great, right? But I think they can do better if they reduce the employee cost or other costs. So look at this number. Net profit from 6 crores to the 328 crores is quite excellent, right? Now let's analyze the balance sheet. Equity capital from 5 crores to 44. Okay, reserves are increasing as they are able to generate too much space. Borrowings. Let's see which kind of borrowings have been increasing. There is no long-term borrowings. Short-term borrowings also not there. Other borrowings are the major part here. Okay. Fixed assets. As we can see, they are increasing their fixed assets. That's a quite good thing. I mean, they are actually investing in the fixed assets. capital working progress. That's okay. So now investment. They are now started doing investment. That will stand for the company so that in future if they are not able to generate profit, at least their other investments can do some good thing. Okay. Cash from the operating cash from the operating activity. Basically, these are the cash which are generated from the day-to-day activity. As you can see, within the 3 years, they are able to generate around 500, 700. We can consider as using 700, 5, 7, 12, 12, 17. Okay, 17 crores within the years, within a span of 3 years. Okay, let's compare with the it is profit before tax. Okay. So they are able to generate around 5, 5, 10, 14. So basically, they are able to collect the cash. They are not just doing credit sales. That's it. That's good. Okay. So it is in minus because as we can see, the payables are here in too many numbers, and loans and advances are there. Other working capital items are too much big here. Look at this numbers. Cash from the investing activity. As I told you that they are actually investing in the fixed assets, and also they are buying investments. As you can see, investments sold also they have gained some value here. That's why they have sold. Cash from the financing activities. Proceeds from share. They have, as I told you, they have valued their stake in the company. Proceeds from the borrowings. Okay. Dividend payment, as we saw that they are paying dividends, actually paying dividends. Okay. Now let's analyze the debtors days. As you can see, the days are decreasing over there. That's very good sign for the company. Cash conversion, I think there is something wrong here. This table and this thing, we don't have to analyze this. Okay. Shareholding pattern. This here we can see that FIIs initially started taking stake in the company. Then in recent event they are started selling their stake in the company. As you can see, when the company was reducing their stake in the company, and suddenly they have bought back for their share, that level was the highest level when the FIIs have holding in this company. And afterwards, the moment the company has reduced their stake in the company, FIIs has started also selling in this company. So now they don't have trust in this company. Okay, and the IIs also don't have that much stake in the company. So let's see if there is any recent resignation happening in the company, so that we can. Okay, there is no reason or resignation happening. So let's see what the credit rating they have got here. A plus. Okay, that's quite good. Overall, company is doing quite great, I can say. And if you want to be invested in the company, you can go with that, and or you can just wait for the price to uh, go in the correction, because as you can see that it has gained too much value within the span of only 20 days. So it will be the